Good morning. Let me thank Prometeia and Lorenzo Forni for the invitation. Thanks for letting me coming back to Bologna, where I have family ties. It is the second time I'm in Italy over the past month to talk about reforms concerning the completion of the Europe's Economic and Monetary Union, the EMU. I don't know why these issues have been asked before lunch, maybe to, I don't know, discourage appetite or to serve as an appetizer. But anyway, as far as I'm concerned, I will not bore you with too long a time. I will speak for about 15 minutes. The slide presentation will be made available to you. So first thing, concerning the discussion that has taken place so far, it has shown that a lot has been done over the past few years to respond to the crisis with a high speed as against the EU historic evolution. And so we talked about banking supervision, new mechanisms, financial instruments have been devised to help countries in difficulty, like the European stabilization mechanism. And now the situation is being recovered, and the countries that are coming out from the crisis are growing much more, and the situation looks much better than a few years ago. We should be happy about it, but we don't want to be in a situation where the need for a reform of the economic union is set aside. And that is why let me highlight a few items that are still relevant for our discussion and that might therefore lead to bringing this topic forward and to justify the need for reform. I think that everyone, or maybe not everyone, has already read a paper published by the EU Commission, a white paper on Europe's future, where a few scenarios are talked about, are referred to about the future of an evolution of Europe. Scenario number one, status quo, and I can show you that status quo for Europe from an economic point of view is not the convincing scenario. First thing, growth in Europe is not that strong, and especially if you compare it to the previous cycle, as the left diagram shows, and with the big gap between Europe and the States, and this gap, growth gap, is big, and this is shown not just by this diagram, but also if we think of this gap evolution over time. Secondly, this difference can also be observed in the interest rate evolution over time, and that again there is a difference between Europe and the States by looking at the two upper curves that refer to investments in intangibles, whereas at the bottom you've got tangible structural investments, and so that again you've got a big difference between Europe and the United States. And if you look at the right, the difference within Europe is quite varied. Germany, France at the top, and at the bottom you will find the other EU countries that are more vulnerable and that have undergone quite a few difficulties during the crisis, with a drop in investment and a very slow recovery, too slow a recovery. Another point to be underlined is that countries have reacted in a different way to crisis. And that is due to the fact that reforms, structural reforms, are underway that are implemented in a differentiated way in the euro area, which shows a different recovery capacity by the various countries. And as this diagram shows, there is a correlation between the countries that have introduced many reforms in terms of doing business and ease of doing business, so they have a better recovery and adjustment capacity, much stronger than other countries, and this translates in important growth differentials. So structural reforms play an important role from the point of view of European challenges. The second item has already been covered by the two previous speakers already. And also, as Mr. Palazzi asked, this relationship between banking system and the government bonds, crisis of 2011 and 12 of sovereign bonds, which is one of the issues to be addressed. A lot has been done as for the banking union to transfer the channel from banks to states so that no state should pay for a banking problem. But the problem that we would like to highlight is that the other direction of this channel stays open. If you've got a sovereign bond problem, it has a stress on the system. As the yellow and red curves say, they turn into interest rate level. As for the lending rates for non-financial corporations, you can see that Italy and Spain went down to a dip with an impact on the ability by economy to support loans, and with the consequent development of NPL, non-performing loans. So this link between the banking system and sovereign bonds, this link is quite strong. And the measures that are suggested that are still underway, the European deposit insurance scheme, etc. Even if all these measures were put in force and implemented, we don't really know whether that would be sufficient. So the situation goes on being vulnerable. And now I would like to say something which is linked to the previous items, namely the fact of having labor markets working in a more linear way and their ability to be reformed. During the during this period, there have been a few structural reforms, and to the right you can read about a correlation between reform efforts done by countries between 2008 and 2013 and the unemployment rate in 2008. So there is a benefit. And when it occurred, the important reforms occurred, but the problem is that this behavior, market behavior, is not linear. So in a 10-year period after the euro introduction, that was lacking, and then it was an excessive situation. So what are the time when reforms are made and the speed of reforms are important. And then the important role played by countries' fiscal policies in supporting economies is very important. Public finance support has been pro-cyclical, so no necessary efforts have been made during sustained growth, and so during the difficulty and in the upper left part of the quadrant when there was a very important crisis that was the most difficult point. So there is a problem in national fiscal policies in contributing to the economic stabilization. A problem like this one exists at a European level, and this diagram shows the same conditions with a consolidation on the horizontal axis and the economic situation on the vertical axis. And so we are now to the right at the bottom of this diagram, and so we're in a situation where we are in a dilemma. We need to consolidate, but the economy is not recovering, and the red spot is the aggregate value for the euro area that derives from national measures that have been implemented that show that aggregate policy resulting from the various member states is in this sort of dilemma situation where you should and would have to support monetary policy that has achieved its maximum limit in terms of interest rates, but there is also this need for consolidation. So this debate is going on. It has been launched by the Commission in November about the need to have an aggregate fiscal policy, or at least to try and coordinate the various national fiscal policies to get a better result, an aggregate results that is more consistent with the economic situation and monetary policies. To complete this first part of our contribution, let me highlight the weaknesses that still remain in the European architecture in spite of the progress and growth that has been made. Growth problem still remains that has to be solved with vulnerabilities that are quite clear in a few countries, reflecting varied fiscal positions and progress in structural policies with high debts in certain countries, and the fact that these structural reforms, policies have not been consistently and regularly implemented over time. And then another thing, financial markets do play a role, and a major role in this system. And so there is an opportunity for them to further amplify the sovereign bank feedback loop and fragmentation of capital markets. So this loop, this gap has to be narrowed between the two elements. So during the crisis, there has been a fragmentation of capital markets that has led to this imbalanced situation as for sovereign bonds in the banking system, and then the lack of fiscal space. And then another thing, the last point that I wanted to highlight, the divergence in social and political choices that have that do reflect and have led to mistrust within the various countries and in the country discussions, given the fact that many countries have been in difficulty, and that has affected the debate with the many different points of view on how to evolve, having various perceptions of what has actually happened and with different diagnoses of the problem and what should be done in the future.
Che appunto presenta le maniere diverse di.
This diagram shows the various solutions that are there for device. These are the various trade-offs. You need to find a trade-off, a balance, to let the Economic and Monetary Union find a way forward to respond to the various concerns and to lead to a balanced economic and political system. So there is a whole debate about solidarity, discipline, short-term response, and long-term reforms, the need for more stringent, stricter rules, or providing more power to the EU level to coordinate policies better. The discussion focuses on whether the demand or supply is what really matters, so whether a European action should be made in an asymmetrical shock or should enter into the various types of situations. And then the institutional level is very complicated. The national sovereignty role as against a stronger political union that is still under discussion, and the fact that you can act in the short term through secondary law changes or go through the treaty changes whose procedure is very complicated and lengthy. What is the approach to be opted for? Should it be an intergovernmental one, which has been the response to the ESM, European Stabilization Mechanism, or the euro area, the community framework, and what should be done with Brexit, the part of Europe which is no longer within the euro area, which is more reduced, and what should be done in the future, without creating any hindrance, but allowing the various countries to address the various pending issues. So many themes, issues, and prospects are now under discussion, and we have to take into account the economic and political evolution to try and come up with reasonable and consistent proposals. Reference has been made so far to the EU Commission white paper on the future of Europe that was issued on March the 1st, with 5 scenarios that are depicted. The first one is the status quo, doing nothing, and the other one doing nothing but the single market. And thirdly, those who want more, do more. In the Rome Declaration, they talk about a Europe with different densities and intensities and speeds, and the fourth scenario is doing less in certain areas and doing more in other areas more efficiently, taking several steps in the various countries, and fifth scenario, doing much more together, which is the scenario that had been launched in 2015 by the 5 presidents of the EU institutions who had issued a report and who were thinking, envisioning of Europe in 2025 with stronger economic, financial, fiscal power towards a true European Union. And a reference can also be found to the white paper as for a few elements of the economic and monetary union, so that these scenarios can be translated into. I cannot enter into any further detail, but you see, you have various degrees, various shades. I've tried and explained that if you stay to the left, wouldn't solve any problem. As already said, we would have more stability, but with the problems related to vulnerability that remain, that do have a cost, and that are a missed opportunity for the future of Europe. This diagram tries and outlines 3 main items that we should work on, that we should focus on, and we have to take various items into account, and an effort should be made to build a bridge between the various stances. Some of them are quite extreme in many countries and within national borders as well. So the main message, take-home message, is that you cannot really have a biased, partial vision of solutions and economics. You cannot really put everything together on the table, because, of course, it is an approach that has been integrated and combined together, because if you just focus on one aspect, you leave other problems develop and become worse over time. So the 3 main items are the financial union, and that has to be completed. The banking union and the capital market unions are absolutely necessary. The common deposit guarantee, the backstop, to be completed.
Si debba andare al di là di questo e quindi avere qualcosa che possa.
And we need to know whether we should go even beyond, or whether we should change the European single market with more stable securities, so eliminating a few forms of volatility by creating more pressure on more linear pressure on securities.
C'è questo dibattito che va avanti e che su cui
The fiscal union debate is still going on, and we will try and see how to complete the national adjustment of sound public budgets by guaranteeing sustainability, but moving towards economic stabilization to support unemployment benefits and supporting labor to have a macroeconomic capacity that will supplement the monetary one. And then the third item, how to create incentives, structural reforms. Unfortunately, they took place only through market pressures during the crisis phases. How to anticipate these reforms during stability times when they are less politically necessary, but when they become urgent, they might be serious and might have more problems in the future. How to change the governance system at a European level so that incentives can therefore lead to these reforms, like the access to the new European instruments that I was referring to. Rather than sanctions, we should talk in terms of incentives to stimulate and encourage convergence and to try and solve the problem, as Mr. Forni said. Let me go back to that. As far as Italy is concerned, during the short video that was shown earlier on, they were talking about the necessary correction of public accounts. Of course, we need to have sustainability and fiscal discipline and control, but there are many other important factors that are relevant for Italy, for example, like repairing the financial market, but also creating and going on with structural reforms, because to make the system sustainable, you need to keep a robust, healthy budget with a higher growth rate that goes through investment rates that are relaunched and that are supported by the financial system that contributes with funds and with the investment capabilities that are very important. One last slide. This is the next step in our work. With the announcement of the white paper, we therefore announced a reflection paper on the deepening of the EMU that should be published by the end of May 2017. We're still working on this document, on this paper, together with many other documents concerning the future of Europe, including defense, social policy, a whole measure documents. And based on that, President Juncker, the President of the EU Commission, will make the speech in the State of will make the State of the Union speech in September 2017 after the launching of the debate around this white paper and reflection paper. And we really hope that, given the new electoral elections that are envisaged this year, a more concrete and fruitful debate will be launched, and so that a better conclusion will be achieved by the European conclusion, where because we know that the Commission and Parliament will stay in force until 2019, so that concrete proposals will be introduced to launch this reform. I stop here. I'm sorry if I was too long, and I would like to thank you for your attention. Thank you.